This is the Self Storage Podcast, where we share the knowledge and skills from the industry's leading investors, developers, and operators to help you launch and grow your self storage business. I'm your host, Scott Meyers, and over the past 16 years, we have acquired, developed, converted, and syndicated over 2 million square feet of self storage nationwide with the help of my incredible team at selfstorageinvesting.com, who has helped thousands of people achieve greatness in self storage. Well, hello, everyone, and welcome back to the Self Storage Podcast. I am your host, Scott Meyers, and today's guest is none other than Mr. Dave Dubeau. Now, Dave is a real estate entrepreneur. He's a best-selling author, speaker, and investor attraction expert based in beautiful British Columbia, Canada. And Dave began his real estate investing career in 2003 by doing 18 deals in 18 months. And then he later switched his focus to client-first rent-to-own deals, which he'll talk about in just a minute. And currently, he invests in multifamily properties. And over the last several years, Dave has been recognized as a leading authority on helping the mom-and-pop real estate investors to find money partners and how to raise capital, which is the reason why we have him on the show today. Now, Dave developed his proprietary 5-step money partner formula, which helps his clients grow their portfolios exponentially and in record time by attracting investors instead of chasing after them, which again is part of the conversation he and I have had over the past several months. And again, the reason why I'm so excited to have him here. So with that, a warm welcome to Mr. Dave Dubeau. Dave, how are you?
Scott, I am fantastic. Thanks for having me on your fantastic show. Looking forward to this. Self-storage is an exciting industry, that's for sure. And I want to tip my hat to you for being the guy with your podcast, with your training, with your education about this. So keep on doing what you're doing.
Well, thanks, Dave. Appreciate it. Just like anybody else and everybody else, we're still learning. I'm still practicing after 15 years, but love the niche. And again, happy to have you here just to continue the conversations that we've been having. So if you would, why don't you fill in the gaps from the intro that I gave everybody and get us up to speed as to, diving in a little more into your 5-step formula and give us a sense as to what we're doing right now.
All right, Scott. Well, I'm a real estate guy who kind of sucks at actively investing in real estate. So I realized years ago that I'm not a big fan of dealing with tenants and toilets. And I know that's not a big issue with self-storage, but focusing on single family homes and small multis and then larger multis. Nowadays, what I do is I partner with people that are way smarter, way better at that kind of stuff than I am, so that I can focus on what I'm pretty darn good at, and that is marketing and raising capital for deals. So that's been my main focus for the last 7 years or so. And what I do, Scott, is I have, I guess what you would call a boutique marketing agency, and we help mom and pop real estate entrepreneurs to shake the tree and to go after the what I call the low-hanging fruit first and start raising capital sooner rather than later for their deals. Because I think, I don't know if you would agree with this or not, but I think the biggest roadblock for most people to growing their portfolio is we all hit the wall sooner or later when it comes to money and credit to do more deals. So when we crack the code on attracting investors to us and using their capital to help grow our portfolio, and we share the profits with them, it's all about creating a win-win scenario. And my kind of unique twist on this, Scott, is applying intelligent marketing and intelligent targeting around raising capital and how to get people started with that if they've never raised capital before.
Mm-hmm. And you are right. That's the keys to the kingdom. You can only, especially when you get into commercial real estate like apartments and self-storage, you run out of your own capital fairly quickly. At least most of us do. And so, yeah, the lid or the ceiling on our ability to grow and scale our business is usually revolving around, hey, our credit now is become not dinged, but the more loans that we have, the banks tend to look a little bit closer at us. And then also our capital. If we don't have enough capital to do this on our own, then we either grow very slow or not at all after a while, or we realize that 100% of nothing is nothing, and we bring in partners who bring money with them to be able to grow and scale. So 100%. And again, that's what we're here to talk about.
Perfect. So Scott, do you mind if I do my little legal disclaimer and cover my butt?
If you don't, I will. So go ahead.
So you guys, I am a marketer. I'm a real estate guy. I am not a lawyer, an accountant, or a securities expert by any stretch of the imagination. I'm up in Canada. Most of your viewers and listeners are American. What I'm going to be sharing with you works everywhere. But here's the caveat. The caveat is that every state and every province has their own security regulator. You folks down in the States also have the Securities and Exchange Commission. So what I'm going to be showing and teaching you here definitely applies to you, but what you need to do is talk with a qualified legal authority, like a lawyer, a real estate lawyer, on how best to structure this in your business. So before you rush out and start raising capital, make sure that you are doing it legally in your jurisdiction. And every place is a little bit different. So what I'm going to be showing you here is the most logical place to get started. I'm not going to suggest how you should structure your deals or what kind of exemption you should be getting or what kind of corporate structure you should set up. That's up to you and your accountant and lawyer to figure out what works best for you. Is that a pretty good cover my butt there, Scott? Anything you want to add in there?
And nope, I think that covers it. Well done. Carry on.
All right. All right. So Scott, here's my philosophy around raising capital. I've got several philosophies. First thing is that we should be attracting investors to us instead of desperately, creepily chasing after them. All right. So that's philosophy number one. Philosophy number two is which comes first, the money or the deal? And a lot of people say, you know what, just find a really good deal and the money will find you. Have you ever heard that before, Scott? Have you heard that?
Yes, I have heard that before, but and I don't want to steal your thunder, so I'll let you go ahead and carry on and talk about the downside of that.
Well, I call malarkey to that. I call
Yeah.
it something different, but this is family friendly, so we'll keep it at that level. I see BS unless you've got your ducks in a row first, unless you've already, like Confucius and Harvey Mackay say, unless you've already dug your well before you're thirsty, right? So my goal for everybody here is for you to have a group of money partners, a group of investors lined up, ready to go in the wings, people who've put up their hand and said, hey, you know what, Scott, when you got a deal, let me know. I want to be in. I'm good to go for this. So when we've got a group of those people ready to go, now we can go looking for facilities. Now we can go making deals. Now we can go in and start negotiating with some mojo because we know we've got the capital and the investors to back us up. Does that make sense?
Yep, makes perfect sense.
All right. So the question a lot of people have, and a big mistake I see a lot of people making when they first get started with raising capital, is they figure everybody and anybody with a pulse and a checkbook that doesn't bounce would make a good investor. And that is a big, big mistake for two big reasons. Reason number one is just logic. In order for somebody to invest $50, $75, $100,000 with you, chances are they're going to need to know you, they're going to need to like you, and they're going to need to trust you with their money, right? It's just logical. So if we're going out to the general public, they don't know you, they don't like you, and they sure as heck don't trust you with their money. So you're starting from scratch, trying to raise, create a relationship there. And the other side of the coin is if you rush out and you do that and you're not set up properly, and most mom and pops are not set up properly for this, right? And they're not at the stage where they really want to be doing this either. If you run out and do this without a license or without being set up properly in a legal structure, you're breaking the law, and that can lead to some serious financial and personal freedom challenges. So we don't want anybody getting fined or going to jail. So let's do this right. So here's where we want to start, Scott. Here's what I always suggest to people. I always suggest, you know what? You've probably got somewhere between $500,000 and $1 million of capital sitting right in your back pocket if that's where you put your cell phone, right? So this is where we want to start. So the big picture is, Scott, let's create a target group of potential investors, and then let's focus all of our attention on them. So what I always suggest to my clients is let's start with a group of about 200 people that you already have a pre-existing relationship with. These could be family members, friends, business associates, people you know from church or civic groups or whatever you're into, sports groups. You know them, they know you. Does that make sense?
Yep.
And that's why I say where we want to start, let's start with your cell phone. And instead of trying to come up with a list of 200 people, because that's intimidating, and most folks say, you know what, I don't know 200 people. Here's what we do instead. First of all, that's probably incorrect. You probably know way more people than you think you do. And the next thing is, instead of coming up with 200 people, let's start with a bigger list and quickly whittle it down to 200 people. So what we always suggest, start with your phone, export all your contacts from your phone, get them into an Excel spreadsheet. Export all of your email contacts from your email addresses, get them added into that same Excel spreadsheet. Same thing with your Facebook friends, your Twitter contacts, your LinkedIn leads. If you're like me and you got a bunch of business cards lying around in your drawer, scan those, get them in there, get all of your contacts from every different source, put them into that spreadsheet. And then instead of coming up with 200 people, now you're probably starting out with 1,500 or 2,000, and you can quickly sift through that. You take a look at them. If you see a name and a face pops into your mind and you like that face, keep them. If you see a name, you got no clue who that person is, delete. Keep, delete, keep, delete, 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 whittle it down to 200 people. So that's step number one of this whole 5-step process, Scott. Let's create a target group of potential investors. Don't prejudge. Don't assume anybody's got money or doesn't have money. Don't worry about that yet. Just focus on the people that you have that pre-existing relationship with. Does that make sense, Scott?
Yep, it does. Perfect and simple enough that I think all of a sudden you just open the door for a whole bunch of folks to continue to take the next step.
Well, yeah, it's huge because again, and I don't know if you find this to ring true for you or not, Scott, but most people, what I call mom and pop real estate entrepreneurs, they've got 1 or 2 deals or facilities under their belt. They run out of cash, they run out of credit. They're probably not doing real estate full time. They probably still have some sort of a job or a profession, and they're not super up to speed on marketing, or they're not super up to speed on sales strategies and all this kind of stuff. And they're not really comfortable with that either. So let's do this instead. And it's so much simpler and it's so much more of a direct path to raising capital than some of the other stuff that we're told we should be doing. So that's step number one. Let's create that target group. Step number 1.2 is let's not rush out like a bull in a china shop, hitting people up for cash right away. That's tacky. The reason I know this is tacky, Scott, is because that's what I tried to do way back in the day when I first started raising capital. It was like, all the stuff I tried cold calling, failed miserably, tried networking and schmoozing. And, I was desperate because I had this deal on the table and I didn't have the cash for it. And that desperation just oozed out of every pore in my body. And then I came up with what I thought was a bright idea. And I put together a little 1-pager and I emailed it to a couple of hundred people. So I kind of came up with that target group, but then I spammed them with my deal right out of the batch. And that was a big mistake because all it did was it really ticked a lot of people off. I didn't raise any money. I had people coming back to me saying, Dave, I haven't heard from you in 5 years, 10 years, 15 years, whatever it was. And now you hit me up for cash, take a hike. All right. So we don't want your folks to have that problem. So here's what we do instead. We got that group of 200 people. What we want to do is we want to reconnect with them on a personal level first. And then only after we've done that, then we switch gears and we start talking business. So when we're working with our clients, we call this a warm-up campaign. And bottom line, we get all of their contacts into an email autoresponder system, Scott, and we send out 3 simple emails to that list of 200 people. First email is just a regular email saying, hey, it's Dave. Here's what I've been up to for the last several years. Talk about the family, talk about, we're not really trying to subliminally do anything tricky here. We're just talking as if we haven't communicated with these folks for a number of years, and we're trying to have a personal reconnection. What's going on in your life? What's going on with the kids, the grandkids, work, if you've moved, good stuff, not so good stuff, how the whole COVID thing's been affecting you, all this kind of stuff. And then at the end of it, you say, well, that's what I've been up to. Now, how about you? How are you doing? Please hit reply to this email and let's catch up. Does that make sense, Scott? And then make sure you get back to those people and have that genuine reconnection, because there is gold in those connections.
Yep, absolutely. Absolutely. Agree 100%.
Yeah. So we got 2 of those kind of emails. And then the third one, this is what we call the transition message. This is going to give people the heads up that, hey, we're going to start switching gears and start talking about real estate. The transition message might go something like this for your viewers and listeners. Hey, this is Dave. It's been really good reconnecting with you over the last week or so. Just want to let you know that moving ahead, I plan on doing a much better job in staying in touch and letting you know what I'm up to with real estate investing, specifically with self-storage facilities. I think real estate is the best way for everyday folks like you and myself to get an above average return on our money backed by a solid asset, real property. And who knows, maybe sometime in the future, you might even want to partner with me and share in the profits on a deal. But you know what? If you're really not into real estate, you can always click on the unsubscribe button at the bottom of any of my emails. You'll be taken off my list immediately. My feelings might be hurt for a little while, but I get over it. All right. And in the meantime, if you haven't had a chance to get back to me, please hit reply and let's catch up. Send that one off there, Scott. And then now, between those first two messages and this third message, we have completed the warm-up campaign. And that is step number one of the process. Now we're primed. Now we're ready to go. This wasn't designed to start raising capital. But what's really interesting is we find that with the clients that we're actually working with on this, in about half the cases, people will actually put up their hand and say, hey, Scott, what's this self-storage thing you're doing? What's this real estate thing you're doing? I'm kind of interested. Tell me more about that. And then that starts the conversation. It's not designed for that, but that's a happy byproduct that can happen quite often. So what we need to do is we need to be ready to go for if and when people put up their hand and say, hey, Scott, tell me more about what you're up to with real estate. So that's step number two. It's creating what I call your $1 million investor presentation. And this is a simple slideshow presentation that walks people through a little bit about your background when it comes to real estate investing, goes over the big picture of what's this whole self-storage thing all about, what are the big benefits, what are the opportunities here, talk a little bit about some of your deals that you've actually got on the go, that you've actually already got in your portfolio, and just give them the general 30,000 foot perspective about how the whole thing works. And we're not trying to get them to sign us a check right there for 100 grand or 75 grand or whatever. What we're trying to do, the goal of the meeting, the goal of the presentation is to get an expression of interest or a letter of intent. So which is basically people saying, hey, I'm interested, Scott. When you got a deal, I want to know about it. Does that make sense, Scott?
That's all we want to do is just create a little bit of attention to what we do and interest, so that when it is time to put a deal in front of them, that they're open to it and they raise their hand. That's all we do in the beginning stages, anyways.
Exactly. All right. So that's step number two. Step number three of the 5-step process is all about the marketing. So people say, Dave, how do you get investors coming to you saying, tell me more about your deals? It's quite simple. It's all about the marketing. I subscribe to a lot of what you do there, Scott, is edutaining type marketing. So edutaining. So a little bit of education, hopefully in a slightly entertaining format. And that's the whole thing. Because here's the big mistake I see us making over and over and over. And here it is, Scott. This is the number one killer of a lot of raising capital. And that is making the mistaken assumption that the other person really gives a crap about real estate. Okay. We gotta understand that we are, and I say this with love and affection because I'm one of us, we are real estate weirdos. Okay. We are different than the rest of the population. In fact, the stat I saw is that 95% of the general population has never invested in a single revenue property of any sort. Their own house doesn't count, right? A revenue property. So if you got one deal under your belt, chances are you're already ahead of 95% of the people on your list. People outside of the real estate investing community, of course, right? So the big mistake I see a lot of people making is they try to over-educate their prospective investors about real estate investing. So they get into stats and data, and they assume that the other person is going to be as keen as we are. They aren't. They're into their own thing. We're into the real estate thing. What they want to know is they want to get the gist of it, and they want to know that we know what the heck we're talking about. Does that make sense, Scott?
100%, Dave. When we got into this business, of course, we have two businesses. We've been investors, and we have the investment side of the house. We've been buying, acquiring, developing, converting self-storage facilities for 15 years. And for the past 12 years, we've also been teaching people and consulting and helping them to do that as well. So when it came time for us to do what we just talked about, which is growing and scaling our business to get really good at raising private equity, well, I thought the best way to do that is to espouse all that we knew and how to teach, because that's what we did in our education business, is how to teach people about self-storage, only to realize that after a few years of what I consider ourselves really getting into, becoming a private equity firm or a financial services business, before I realized hey, we're in the money business. We're a financial services company that invests in, and we use self-storage as the asset class of choice to do so. So it took me a good probably 2 to 3 years, Dave, before I really understood what that meant and what that looked like, and then can put myself in our partners' views, if that makes sense.
Yeah, exactly. So yeah, it's completely different businesses, right? Your education business is focused around real estate weirdos like us because we love that stuff, right? That we're keen on that. Your money raising business is focused on normal human beings, right?
Right. Who are looking for returns, who are looking to
So
invest. Yeah,
exactly.
exactly.
So they want to know that Scott is the expert when it comes to self storage. They want to get the big picture idea for sure. They want to understand the big benefits and how their money is going to be collateralized and secured. But they want you to know the day to day minutia of the business. That's why they're investing with you. So that's another big thing that I learned is it's not even so much the deal, Scott. And I'm sure you've seen this over and over again. It's not even so much the deal. It's you that they're investing in you. The deal is really the collateral for their investment. That takes a little while and raising some capital to really understand that, but it really is all about that relationship. So that's step number 3 is all about let's create that ongoing, constant, consistent communication, the marketing side of things. Being a marketing weirdo that like I am, I assumed erroneously, mistakenly, that most people love marketing, and nothing could be further from the truth. Most people don't like marketing, they don't like doing it. So, what I suggest is find one thing when it comes to marketing that you at least don't mind doing and do it consistently. Don't try to do a gazillion different things right out of the gate. Just pick one thing, do it on a regular basis. If you're just getting started with this, shoot for getting something out at least once a month on a regular, consistent basis. Once you get comfortable with that, maybe bump it up to once every 2 weeks. Once you get comfortable with that, maybe bump it up to every week, 4 times a month. You're communicating with your list of prospective investors, giving them some kind of light edutaining type information, showing off, without showing off, but showing people that you're actively doing whatever you're doing. Take a walk through one of your facilities, talk about a little bit some of the fun stories that you've had around your facilities, not the nightmare ones, the fun ones. And just let people see that you're actively doing what you're talking about. And then here's the trick. And here's where a lot of people make a mistake. The trick is because people say, well, Dave, how do you get investors booking appointments with you? How do you get them texting you or calling you instead of you chasing after them? Here's the trick. You tell them to. So you have a specific call to action at the end of all of your marketing, whatever that is. You say, hey, if you'd like to find out how this can work for you, click on the Contact Me tab on my website and book a one-on-one meeting with me. We'll jump on Zoom. I'll show you how it all works and see if it makes sense for you. Does that make sense, Scott? So it's all about being very, very specific on what you want them to do.
Yep, 100%. Otherwise, if you're just hoping that then they'll show up on a webinar or I'll call back when it's time for them to invest, no, we have to tell them what to do and then continue to tell them. So
Be
once
very
again, I agree
specific.
100%. Yes.
Yeah, very, very specific. All right, so that's the marketing. Start with whatever you're comfortable with. If you're, just so darn good looking and amazing on camera, and just God's gift to visualization, like Scott and I, then you can do this video stuff. That's fine. I'm joking. All right. But if you're more comfortable writing stuff, then take a look at maybe doing blogs or electronic newsletters, whatever it is, whatever you're comfortable with, pick one thing, do it consistently. And then after you get the hang of it, maybe add a few more things on. All right. So that's step number 3. So we've got step number 1, we've got our target group of prospective investors, a couple of hundred of them. We've broken the ice with them before we start talking business. Step number 2 is we're ready to go with a $1 million investor presentation. I suggest a slideshow presentation. That just works best for one-on-one communications, plus, doing online presentations as well. Step number 3 is get some marketing up and going, constant, consistent communication. Very, very important there. Pick one thing, get it rolling. Step number 4 is let's be seen as an authority, a real estate authority in the eyes of those 200 people. We don't need to be world famous. We want to be famous as a real estate professional in the eyes of those 200 people. All right. So the different ways to do that, low tech, high tech type ways, but some simple ones are anytime, what I suggest, anytime you're talking with somebody about doing business with you, about investing with you, dress up a little bit. All right. You don't have to go overboard, but dress up a bit, look sharp. That'll show them that you respect them. It'll get you some respect from them as well, and just helps you look professional. All right. Next thing is make sure you can talk and explain your strategy and your market in a simple fashion, right? So you need to be able to explain the big benefits, big idea benefits around self-storage investing and the particular market that you're investing in and why that market makes sense for self-storage. All right. So be able to explain that so a 13-year-old can understand it. Then you know you've got it. Other ideas, good looking materials, have a website specifically for communicating with your investors. That's important. That's a different website than the one advertising your self-storage business. Very different websites, right? You don't want to mix and mingle those. So have different websites for each thing. And, have some sharp looking marketing materials. Invest a few bucks, get some professional headshots taken. You can use that in your PowerPoint. You can use that in your website. Get some professional business cards done. Don't be cheap and chintzy with the business cards. If you're trying to raise hundreds of thousands of dollars, that's not the place to be chintzy. So there's a few different ideas there on how to create that credibility. And then remember, you don't have to wait for anybody to anoint you as the expert. You don't have to have 57 facilities in your portfolio to be seen as an expert. And this is a big challenge because, all of us, real estate weirdos, we're looking up to people like Scott and people that you interview, people that probably have significant experiences, significant portfolios. And you say, well, I'm not there yet, so I'm not worthy. No, that's not true. Remember that the vast majority of the people on your contact list have never done a single deal. And if 95% of the population has never done a single revenue property deal, imagine what percentage of the population has never done a single self-storage facility deal. I can't even imagine. It'd be like the percentage of people that have done a self-storage deal, minuscule. All right. So if you've got one facility in your portfolio, you are the expert. All right. You are the expert in the eyes of those people. So now you just need to step into it, realize you're not trying to be a world-renowned expert. You're not trying to get on Oprah. You're not trying to do any of that. You're just looking to be seen as an authority in the eyes of those people. You following along here, Scott? Does that resonate?
I am. And one of the things that I wanted to touch on real quick, Dave, is that you're 100% correct in the fact that so many times people think that they have a website, which is a catch-all. Here's what I do, and here's what we've done, and it doesn't serve really any purpose. It's just a kind of a collage of everything that they do. And we had 3 websites. We've now gone down to 2, but one of those is the passive investment side of our business, where we're attracting private equity that specifically has a message and a theme throughout, and it is our online credibility kit. Dave, I think you've got a little bit of gray hair like myself. I think you remember the days when we used to carry our credibility kits around and hand them out in 3-ring binders. Well, we no longer do that, and so we make very clear for those folks that work in our platinum mentoring programs, we create that credibility website for them so that there is that distinction. And as you said, you have to point people to where you want them to go to learn the rest of your story, because those initial conversations and emails, that's just icebreakers and building rapport. Let them do the research, but point them to the research.
Exactly. Very, very well said. So that's step number 4. And then step number 5, this is the beautiful thing. And I'm sure you've seen this in your life, Scott, because you've been doing this for a while. And you've got a lot of happy investors. Once you get 1 or 2 happy investors on board, you can start the snowball really rolling, right? The snowball effect, because if you got a couple of happy investors, they tend to know other people with money. So if you proactively go after it the right way, you can get very effective testimonials and warm referrals. So that's what that's all about. It's about going after that strategically, going after that at the right time and the right place, and not being clumsy about it. So very important that you don't just kind of, again, rush out like a bull in a china shop, trying to get, one of the big mistakes I see people making is they offer reward for a referral to another investor. Big mistake. I mean, it kind of seems like it might make sense on the surface, but if you think about it, it's a big mistake. So there are ways to show appreciation for getting referrals and testimonials, but you don't want to be offering a reward for it. That's about it. That's the 5-step process there, Scott. You
All
do
right.
all of that and
Mm-hmm.
consistently, this is how you're going to be able to go after the low hanging fruit and start raising capital from the people that you already have, that you already know. And it just makes sense because in order for people to invest with you, they need to know you, like you, and trust you.
Mm-hmm.
If you go after those 200 people, they already know you,
Mm-hmm.
they already like you. Now we really just have to work on, do they trust you with their money?
Mm-hmm.
I don't know if you know a guy named Meatloaf, but he wrote a song quite a few years ago called Two Out of Three Ain't Bad.
Yeah.
So we got 2 out of 3 there. That ain't bad. That's a good start.
So, and once again, 100% correct, Dave. And one of the misnomers years ago when I got into the business is I felt that the deal had to be super strong or the returns that we were offering in order to attract folks. And although you need to be competitive in terms of the returns that you're offering, it needs to be in an asset class that they can understand and make sense of. And your presentation and your business plan has to be clear. And they can very clearly and simply, as you put it, you can point the path to profitability and your client, your investor partner that's going to come alongside of you can understand it. So, but the most important thing is the and or the but is that more than anything, they need to feel comfortable with you. And, studies have shown that over and over again, as well as just, our own thoughts and understand that, it's one thing to say, to promise a 30% IRR in 3 years on this project and, numbers look fantastic in a 10x multiple. Well, if you've never done that before, it's only a presentation. It's only a PowerPoint. So the
Well,
folks that
here's
can
the other
raise
thing.
that capital are the ones that have successfully bought, created value, sold, and given those returns to their investors. Would you agree?
I would agree. And I would also suggest we got to be careful with the jargon because a lot of the people, especially within your sphere, aren't even going to know what an IRR is. And you
Mm-hmm.
start throwing these numbers around, they're going to, get confused. They're going to feel dumb. They're never going to
Mm-hmm.
admit that to you. And a confused mind says no. So we got to
Right.
be, again, we got to, here's my kind of criteria. And I'm not saying that our investors are dumb or they're naive by any stretch, but they're not in the weeds with this. Now, at this point, Scott, you're probably working with a lot of accredited investors and people that are at a higher level who do understand that. But when we're first getting started, when we're working with our sphere, most of those people are also mom and pop money partners.
Mm-hmm.
They're not sophisticated. They're not accredited investors per se. So we got to make sure we keep it simple for them. And here's another point that you brought up that's so important. And I made this mistake early on. Do not show your best deal as if it's the norm. So our temptation is with our presentation is to take our home run and to show that one because we're so proud of it. And here, and it is possible to make some pretty outstanding returns on a real estate investment with self-storage or otherwise, right? But here's the problem. We're dealing with a normal human being, a non-real estate person who's accustomed to making zero, pretty much zero in their savings account. They're making maybe 3 or 4% in their mutual funds, maybe. They're making next to nothing on T-bills or certificates of deposit or wherever the heck they've got their money now. They're not making very much return on it. Now we go in there, we store them in, and we say, hey, here's this deal we did, and our investors made it, annualized 37% return on their money. It's going to, first of all, it's going to sound too good to be true. So their spidey senses are going to go off and they're going to say, it must be a scam. And the second thing is, if that doesn't happen, well, now what is that expectation? So if we bring them into a deal and we only get them a 23.5% annualized return on their investment, well, now even though we've outperformed anything else they could possibly even think about doing, we haven't performed to the level we showed off at. Does that make sense?
No,
so you got to
sure does.
Make sure that you show them it's like you say, it's got to be competitive, but do not assume that the other person is looking for the kind of returns we are or the kind of returns that we're accustomed to. Very, very important.
So, David, in the few minutes that we have left here, I would like for you to go through in very short fashion, what the process looks like when you have a deal and how you go about raising capital. For instance, in our projects that we're working on, once we have a deal, whether it's an acquisition of an existing facility or it's a development or a conversion, and once we get to the final number as to what this project is going to cost, we do our math and reverse engineer to the returns that we're able to offer our investors. And then therein lies the equity and the percentage that they'll get. and the time frames. And once we have all that, then that we create a PowerPoint, a slide deck, and that we send out to. And in advance of holding a webinar, we put this in front of some of our investors that are repeat investors. And we reward those folks that have been investing with us on a regular basis, or some of the folks that are maybe have larger pools of money, or maybe even some hedge funds. And then if we haven't raised all the capital at that point, we will hold a webinar, and folks can then invest at our minimums, and usually in a few weeks to a month, we've raised our capital for the project. And then we have a portal on the back end to manage all that. But in roughly that same amount of time, give us an overview, a snapshot of how you go about, what is your process for raising capital?
For my own deals that I'm involved in?
Yes.
Well, it would be very similar to that. So what we're trying to do is we're trying to have that bunch of investors ready to go, lined up in the wings before we even go out making offers and tying up deals. So that's step number one. And that's what this whole thing's about. Let's do that first, which you've done beautifully, Scott. So if we've got that lined up, then yeah, it's a very similar process. We crunch all the numbers. It's basically, I do it slightly different. I don't send, I go after my hottest, ready to go investors first, say, hey, we've got a great deal on the go. We're having a live presentation about this via Zoom. It's going to be at Thursday at 5 p.m. You're definitely going to want to be on that. It's first come, first serve. You've got first dibs on this. So that's where we go first. So I'm not, myself personally, I don't like to, I kind of like to create that kind of aura of expectation first. So they're looking forward to seeing what this is all about. That, in my experience, kind of creates a little bit of excitement, and to a certain degree can create a little bit of competition to be the one that gets into the deal first or gets a piece of that particular deal. Does that make sense?
Mm-hmm.
But otherwise,
Absolutely.
It's the same idea. Like you've already, through all these years of experience, you've already created not only your target group of prospective investors, but you've got your subgroup of actual investors and people who've put up their hand and said, hey, Scott, when you got a deal, I want first dibs. Well, that's the beautiful place, because now we're in a position where instead of us chasing the money, we can get the money to chase us. And that's exactly where we want to be.
And that's what it's all about. Well, Dave, once again, thanks so much. I appreciate your time today, and I'm sharing the top 5 in your money partner formula, as well as going through the process and how people can get started, and really also for the encouragement. You made it sound so simple, because it's one step at a time, and it isn't that difficult. And so many people are fearful of this side of the business. And if you take it one step at a time, but like anything else, if you've got a system and you've got a process that you can follow step by step from somebody who's walked this path before you, then it's really just a matter of doing that and putting your own private spin on it, and then putting that process and that formula into your business. So with that, Dave, how do people get in touch with you? And do you have any other information, maybe some ways that they can get started in this?
Yeah, for sure. So Scott, my method of my madness is I teach people all about this stuff for little or nothing. And then my business is that we've got a boutique marketing agency that we provide done for you marketing services to help people actually implement this. So that's my business. If you guys are interested in getting in touch, here's the best thing we can do. And Scott, you can tell I've spared no time or expense in putting this together. InvestorAttractionBook.com. Go there, InvestorAttractionBook.com. I'll trade you a copy of my book, Money Partner Formula, which goes much more in depth into this, for your name and your email address. You give me your name and your email address, and you'll magically get a PDF copy of my book transported to you via the magic of email, and then you'll be in my ecosystem. And if you'd like to attend a live web training class about this, that's great. If you'd like to attend a live full day virtual workshop, which you do on a regular basis about this, love to have you there. And then if you'd like to work with us and help you actually get this stuff done, we'd love to talk with you about that as well.
Fantastic, Dave. Well, once again, thanks so much for your time today. And one last question I'll ask, as I've been asking a lot of our guests recently, and that is, we've had a year in which there's been, it's been a little different year with, let's just say, with COVID, with the election. We've had tensions in our country. And then we are heading into the coming year where there's a prediction that we may be heading into a recession again, and all signs are pointing to that. So That being said, what is the strategy, or at least words of wisdom, or the path that you think people should be taking right now?
Well, you know what? I realized early on this year, Scott, that my crystal ball sucks. This whole COVID thing hit, and I figured, it's going to be financial mayhem. It's going to be crazy. Within any crisis like that, there's tons of opportunity. So I wasn't worried about that.
Mm-hmm.
But I just thought the bottom was going to fall out of the real estate market. Up here in Canada, that definitely didn't happen. In fact,
Mm-hmm.
property prices are still going up
Mm-hmm.
at stupid rates.
Mm-hmm.
I didn't realize that, the government was going to be printing out money like crazy and just keeping everything afloat financially until this kind of settles out. So
Mm-hmm.
I'm not the right guy to ask about the crystal ball, but bottom line, from what I understand and what I've seen, and I've worked with several clients who are in your industry, self-storage,
Mm-hmm.
and that seems there's no I hate the term recession proof, but
Mm-hmm.
self-storage seems to be one of those kind of businesses where in good times it's
Mm-hmm.
really good, and in bad times it can still be pretty darn good
Mm-hmm.
because you got people upsizing, downsizing,
Mm-hmm.
and if there's one thing we all got, it's a bunch of crap
Yeah.
you need to put somewhere. So I think word of advice to your folks is stay the course
Mm-hmm.
and keep chugging at what you're doing, because it works in good times and in bad times. Same
Yeah,
with the property.
well, we are very recession resistant is perhaps the better way of putting it here, and we agree 100%. So, Dave, thanks so much. I appreciate the offer also for the book. If you would put that up one more time, Dave, it is,
Well, the flash on your screen here, super high tech.
there we go,
Investor.
investorattractionbook.com. So grab that, gang, and devour it, and then attend one of Dave's webinars and begin learning, because before long, if you're not already at that place where you need some private equity, you need a money partner, or money partners to come along to help grow and scale your business, you will be before long. And the time when the deal lands on your desk and you don't have the money, you're not going to get that deal. So the time to start is now, so that you have those folks lined up. And all you're asking for is permission to put a project in front of them when the time is right. So the time to start is now. So Dave, thanks again so much. Appreciate you. Stay safe, and look forward to talking to you again very soon.
Likewise.
Take care. Ladies and gentlemen, thank you for listening as always. Now, we're going to be talking about topics like this that are on target for the times that we find ourselves in. So it is important that you are listening to this podcast every single week, because the guests that I'm going to be bringing on and the topics we will be covering are relevant to what we are all going through right now. And it's just going to get better and better and better in terms of the content that we're going to be discussing, and it's going to be more timely than ever. So please, make sure you subscribe to the show, and make sure you're paying attention to these episodes as they are coming out during this period, as I am specifically going out and finding guests who are providing really valuable information you need right now. So thank you so much. We'll see you next week.